Well, thanks for tuning into India Market Close right here on NDTV Profit. Let's pull up what's happening in the markets, and let's also show those charts wherein we're just not showing the Nifty standalone, but showing what the Nifty's done intraday as well with the highs and the lows, because I think that gives a great picture, particularly in the case of the Nifty Bank today, simply because that was at a point of time in the red and not participating. This is the Nifty Bank I'm talking about, and like I said, the low of the day, 47632, it hit here. And since then, I think the stock has done well, is now trading very close to the high point of the day. So banks were not participating. They are participating now, which is a great piece of news. So Nifty Bank doing well. We know that Nifty IT has done well today, so no surprises there. And Nifty 50 itself, 164 points, trending at the highest point. So banks plus IT doing participating together is a killer combination. Does this mean that this is the top? No, remember we were talking about the possibilities of profit booking in the second half of trade. If anything, the exact reverse has happened. That is the beauty. This is Nifty IT, and yes, it's come off from the highs of the day, but still doing well. So banks plus IT doing very well. Just get the mid cap and the small caps and the advanced decline very briefly before we go to the heat map. So the mid cap index will come up on your screen. Then we'll get the small cap index. That is trending lower. The small cap index will also come up on your screen, and let's see what that is doing. Steady as she goes. And let's get the heat map then and just show you what's happening at the Nifty and on the stock specific moves. So you will see some traction in IT for sure, because that's how it's been. The top four names are IT names with HCL Tech, Infi, TCS and Tech Mahindra. Adani Enterprises, we spoke about that being a stock in news today. Metals have given company. There's a little bit of company in Reliance Industries, but we don't have banks in the top 10 gainers. It's just that a clutch of banks are probably moving together. Tell you what, HDFC Bank is not even in the list of gainers, and yet the Nifty Bank is up about 0.44%. So really strong show put up by the banks as well in the second half of trade. So good going. By and large, not too many losers, but for a couple of defensives like HDFC Life and Nestle. And the small caps are doing very well. Tamanna, your list must be looking very strong.
It's looking strong and it's fairly long. I mean, the kind of news flows that are coming in is very, very interesting. I'm going to talk about some sharp gains through the day on news flow. Sunflag Iron, let me pull that up. That stock actually jumped almost 14%. It's pared down a bit, down to about 11% up right now. But Sunflag Iron had news coming in. It's got an LOI, letter of intent to develop ore block in Maharashtra. It's got a composite license for 6 iron ore blocks. I just want to talk about PNB to take off from what Niraj is saying. It's a day for banks in PNB because it's become the third public sector bank to cross the 1 lakh crore market cap. So it's entered that club. That stock about 2% up. How can I not speak about BEL? Huge order there, important order there, 3.5% up, close to 5,300 crore order from the Defense Ministry. They're going to be making something called electronic fuses. It's an important part for artillery guns, and they've got that order. Biocon, because simply there was a report, actually more like rumors this morning, that they are going to pare their stake in their API companies. They have put out a press release saying that they're not evaluating any divestment options for APIs, and this is a strategic business segment, a key growth driver. I have to talk about IREDA, because what goes up must come down. Look at IREDA today on a lower circuit, down 10%. And yes, that profit booking is taking place. We've been speaking to experts last couple of days who've been talking about how, all right, good fundamental company, but the valuations beyond the point were just not making any sense. And you're seeing that play out. Genus, let's talk about Genus. At some point of the day was locked in upper circuit as well. Now about 5% up. So they've got 1,026 crore order. We talked about this morning as well. So they're going to be making smart meters. And how can I forget the railway stocks? So it stems from 100,000 crore rupee vision and plan by the Rail Ministry to upgrade India's rail network. A lot of beneficiaries, Texmaco was one of them, 3% up today. So they have an order worth about 1,400 crores. They'll make wagons. You have Jupiter also in that lot. So let's pull up Jupiter and see what's happening there as well. And, some of these stocks have really been running. In fact, railway has been a consistent theme, and we'll have a more detailed report on that ahead. I just want to talk about Hero, and I know it's in your list of top gainers today on the Nifty as well. But Hero has been in the news since this morning. It's risen to a 6-year high. After that, possibly you've seen some profit booking coming in, but they are acquiring an additional 3% stake in Ather, which makes EV two-wheelers. That entire story is beginning to look very, very exciting, as the most achievable push for EVs is definitely in the two-wheeler space. So these were some of the things on my radar, Niraj, but there are so many little stories in the market today, and also the fact that it's kept up.
Yes, it's kept up, stayed very well, and banks too are just starting to rally a bit. So, during the course of the day, we'll talk to experts on this. We've got the perfect set of guests actually to talk about what's happening in IT, because Dipan Mehta would be there, and Amar Singh Dev of Angel would talk about the charts as well. But just before we get them on air, let's go across to Himansh, my colleague for the volume buzzers in the market. Himansh, good afternoon.
Good afternoon, Niraj. So the volume buzzers of the day that have largely been in discussion today on the back of large deals mainly. Firstly, you have the likes of KFin Technologies. You see 1/5 of the company change hands today. Then you have the likes of Zensar Technologies, volumes that were up 14 times their 30-day averages. J. Kumar Infra Projects, as well as Sunflag Iron and Steel. Now, the news flow relating to these and why these stocks are buzzing today are on the back of firstly KFin Technologies, where supposedly General Atlantic has sold 20% stake today. It pre-transaction, it used to hold 49% stake in the company, and if this were to go through, this large trade implies a 1,462 crore from its IPO price. So the stock has been in the red throughout the day, down as much as 9.2%. J. Kumar Infra Projects volumes were up 12 times, like I mentioned, after a 583 crore order win coming in from Chennai. The stock also hit its life high today. Sunflag Iron and Steel is also buzzing with volumes up 9.57 times their 30-day averages, following a letter of intent received for a 658-hectare land parcel for mining iron ores, and the subsequent grant of the license is expected after fulfilling some prerequisite conditions. Zensar Tech is on the back of large trades, and what's interesting is that the stock has given the most returns in this pack at least, rising by as much as 174% in the past year, and it also hit its life high today.
Okay, thanks a lot for that, Himansh. A lot of stocks to talk to our guests, and like I said, perfect guests to get on the show today. Dipan Mehta, founder and director of Elixir Equities, joins us, as does Amar Singh Dev from Angel, and great having both of you. Thanks so much for taking the time out. I can't not talk about IT at the start of the show simply by virtue of what's happening. Dipan, thanks so much, of course, for joining us in our launch week. And I will start off with you because you track this space so closely. We'll come to the markets at large too, but just trying to understand what's happening here, Dipan. 2 days or 3 days on a trot. Is it the yields? Is it just the market wanting to pounce or latch on to something which hasn't rallied thus far? What's your sense?
Yeah, Niraj, good afternoon, and thank you for having me on your show, and all the best with your relaunch. I wish you all success.
Thank you.
Now, I think the trigger point for IT was the Fed to cut interest rates over the next few months or so, and that has taken the US markets to all-time high. And there is a strong correlation in US economy and Indian IT stocks. So we are seeing that kind of a positive sentiment flow to Indian IT companies as well. On the whole, I think Indian IT companies have underperformed, especially the large cap IT companies have broadly been in line or slightly underperformed the broader market indices like Nifty and Sensex. And valuation-wise, ownership-wise, they are pretty at very attractive levels also. And with FII flows becoming positive, these are large cap stocks which FIIs typically target. So many positive factors all confluencing together for Indian IT stocks to move up. And if I may just take a minute more, if you notice that over the last several months, most of the Indian IT companies have won huge orders, multi-year, multi-million dollar. It was just that execution was not picking up and clients are going slow on deployment. But I think once the confidence comes back from the US economy, we will see a lot of these orders and contracts starting to get executed. And maybe 2 or 3 quarters down the line, you could see IT companies reporting excellent numbers.
Deepan, hi, Tamanna here. Great to speak with you after quite a bit and have you on NDTV Profit. Just want to get your sense and a follow-up to what Niraj was speaking about, because IT is having its moment in the sun. But again, would you bet on your larger IT companies? Your mid-IT companies also seem to be showing a lot more potential. What would be your favorites here?
First, good afternoon, Tamanna, and very pleasantly surprised to see you. It's been a while.
It's been a while.
No, I think that large cap IT is where the action will shift to. I think a lot of foreign flows will come in, and that's where they will focus on. Valuation comfort is there with large cap IT, corporate governance standards, buybacks, good distribution policies, and I think most importantly, base effect also will come into play for large cap IT companies. They have a lot to catch up in terms of returns. And next 2-3 months, you will see a good amount of rally in large cap IT stocks. Although the medium to long term, our preference is for mid cap IT. But on a tactical basis, I think the likes of Infosys, Wipro, HCL, Tech should do very well over the next few weeks and months.
Amardev Singh, welcome to the show. Good afternoon to you. Let's just first talk about the indices and the kind of strength that they are showing at this point. What would be the levels you're looking at right now on the upper end and the lower end?
Yeah, thank you for having me on the show. So talking about the indices, first I will speak about Nifty. So Nifty, what we've seen is that a spectacular rally has taken place, and also what has happened over the last I would say 8 to 10 trading sessions, the shorts have really been caught on the wrong foot, because the ferocity with which the upside has happened, that's really caught many unawares. And also what has happened is that there were gap up openings, and that also with significant percentage. So that clearly tells me that the market is there to stay, and even the trend, looking at the trend and the momentum, and also looking at the derivatives data, which clearly shows that there has been long build-up which has been taking place for quite some time. And also we are seeing a broad-based rally, because now we've seen the banking space also, because HDFC Bank, which was lagging behind, ICICI, which was lagging behind, we've seen them also deliver significantly over the last few days. So that has also helped Nifty, because it was Bank Nifty which was not really firing, and that has really taken off. So as far as levels are concerned, I would say on the upside, Nifty is likely to meet the resistance around the 21,450, 500 zone, whereas on the downside, support is around 21,150 and 21,200 levels. So that's a zone of support and resistance. Overall, the trend remains positive and bullish, and we've been long for quite some time. And talking about Bank Nifty is also moved on a different trajectory, because if you compare both, Bank Nifty has recently breached its all-time highs. So that tells me that there is more in store on as far as Bank Nifty is concerned, which could further trigger an up move, and what we are witnessing in the likes of SBI also moving significantly higher, and the large cap banks also moving upside. So as far as Bank Nifty is concerned, the immediate zone of support for Bank Nifty on the downside is around 47,300, 400. That's a zone of support. Whereas on the upside, resistance is around 48,500 levels.
Okay. Well, at some point of time, we'll talk about Nifty IT as well. But Amar, can't go into a break without talking about your ideas for the afternoon as well.
Yeah, so first stock to look at is Tata Steel, because what we've seen in Tata Steel is that this stock has been an uptrend, but it was slow and steady sort of thing. We've seen a very sharp movement today, and it has breached its zone of resistance. Earlier, it was meeting with resistance. There was a double top formation also. That has been taken out. And it's trading around 135, 136 levels. So one can enter at current levels with a stop loss of 127 and a target of 151 on the upside. And the second stock to look at is from the banking space, and that is SBI. Because SBI has, on longer term charts, it has breached a triple top. So the top has been breached, and the stock has been witnessing very strong momentum from a short-term perspective as well. So any pullback in the stock towards 635 odd levels can be used as a buying entry, with a stop loss of 603 on the downside and a target of 683 on the upside.
Okay. Well, that's the long and short of how the markets have started off in the opening thoughts from our experts. We'll need to slip into a very quick break. We'll come back and talk more about some of the key movers for the day and for the week. Remember, it's been a trending week. It'll be lovely to talk about things that have done well through the week as well in moments from now.
Just a bit of time left to go, 30 odd minutes left to go for markets to close, and we're staying up strong. Just about 200 points up on the Nifty. The Sensex also looking like it's doing very well. I want to talk about another theme of the day, which is railway stocks. Now, this comes from a larger plan and vision of the government to rehaul, in a sense, rail infrastructure in this country, whether it's for passenger or freight. So a large number of orders have been going out. You've seen that run up in Texmaco. You've seen it in Jupiter Wagons. A lot of financiers of rail companies also have been running up last few days. And let's just take a quick take from Deepan and Amar on this entire space. Deepan, if I were to ask you about not just rail, but the whole infra kind of play, are you buying into that story, and has there already been a huge run up?
See, Tamanna, first of all, at this point, you're not buying into anything. Markets are getting a bit overheated. And maybe apart from large cap IT, which we discussed, and maybe large cap private sector banks, there's not much of value left in the rest of the market, be it infra or infra construction companies or railway or even the PSU financing companies as well. So this is a period of wait and watch, and let's see how the market plays out. If you're already invested, then it's best to remain invested and ride the upcycle. But investing at these levels may perhaps impact your long-term performance in terms of returns. Specifically coming to railway stocks and the railway finance companies, I think they're certainly in for a new growth story over there. And the order visibility position is improving by the day. And most probably with BJP retaining power, you may see further impetus being given on government spending in the railway sector. And there's a long way for railways to go in terms of modernization and safety and expanding the network as well. So these companies have a great time over the next 3-4 years or so. But it's just that they may have run a little ahead of themselves and there may not be enough margin of safety. But at corrections, Texmaco and Jupiter Wagons and some of the other companies engaged in railway projects, RailTel also for that matter, could do pretty well going ahead also. So they're great long-term bets. But from a short-term perspective, I just want to wait and watch.
Yeah, important to wait and watch. IRFC is another one, has been running up a fair bit. And I want to get Amar's view on the charts, whether you are also feeling like there is just a bit of too much interest in these stocks, it's in the overbought zone, or do you still see some opportunities here?
Yeah, I would say that at current levels, I would agree with what Deepan said, that the stocks have really run up sharply. Talking about IRFC, that's up year till date by almost 200%. If I look at Jupiter Wagons, that's up by almost 266%. If I look at Rail Vikas Nigam, so that's almost up by 167%. Talking about Texmaco Rail, again, that's up by 200%. Titagarh is again up by almost 380%. So the stocks have witnessed a spectacular rally in this 1 year. So at the current levels in some of the stocks, we are seeing some sort of consolidation happening. Yes, they are definitely in overheated markets. So at current levels, entry, see, one can take an entry, but the risk-reward ratio wouldn't be in one's favor. So rather, wait for any significant correction to enter in the stocks, because the long-term structure of these stocks continues to be extremely strong. So effectively, it means is that any pullback, any correction, that can be used as a buying opportunity, but not at the current levels.
The interesting thing is Titagarh Wagons has just done a QIP last week and at a sizable price, and has got some massive oversubscription as well. So completely by the point that both Deepan and Amar are making. Fundamentally, what Deepan is saying, he's not buying anything but railways for sure. But yeah, somebody's buying them.
Well, whether you buy the stock or the story, the question is, what is it all about? And I'm just going to play out a quick excerpt of a conversation we had earlier in the day with Vivek Lohia. He's the MD of Jupiter Wagons. Listen.
Yes, it's a substantial order book, and these are again modern design wagons, especially for the DFCC, and they have a capacity of about 25-ton axle load. And going forward, you're going to see more such wagons. There is another tender which is out for another 10,000 wagons, which is going to be a complete new design wagon, which we need to offer to the Indian Railways, again with 25-ton axle loads and with completely new bogies and other features in it. Currently, our order book with this order, if you add, is close to about 7,000 odd crores. Which, given the order book, we are sitting very pretty. I think till about FY25, we are completely, in terms of the order book, we have a very clear visibility. So in terms of completion of the order book, it will be mainly, the execution will mainly be in FY25 and it will get extended to FY26 also. Currently, the current order books which we have in hand, we are in the process of executing the same. Capacity today, we are producing close to about 750 wagons a month, and the idea is that by next financial year, we are looking to ramp up the capacity to about 1,000 wagons. We have done a substantial capex for our foundry as well as on the wagon fabrication side. We have done also backward integration where we have added brake systems not only for our freight business but as well as for the passenger business. And now we are looking at adding capacities in terms of manufacturing of wheel sets also.
Yeah, quite something really what's happening in railways, but let's wait and watch if that continues. Need to slip into another quick break. On the other side, we'll get you the top ideas, the closing strategies as we head into the weekend, and talk about the sector in focus today, which is information technology. We've taken Dipan Mehta's views, getting somebody who tracks the bottom-up data and the EPS numbers, etc. very closely. Onkar Tangsele will be joining us on the other side. There is a party which is going on right now on Dalal Street. I must say the Nifty is about 21,400. Sorry, if you thought that 20,000 was expensive, what do you have to say now? Just quite crazy, really. And banks are participating. It's a really strong move that we have in the indices. Look at the Bank Nifty, 0.8% up. If you can just get the constituents of what's moving in the Bank Nifty, really, because yes, IT is the buzzword, or IT is the strong word, but banking is the buzzword in the last 1 hour of trade. Look at those gains. Bandhan Bank up, except Kotak. Most names, or all names in the green. And HDFC Bank has not participated, but some of the others. Bandhan, State Bank of India, 3.7%. PSU banks are really rolling and doing extremely well. You know, quite stunning really what's happening here. Let me get in Agam to talk about what's the derivative picture looking when it comes to the market, when it comes to some of maybe the banking names as well. Agam, good afternoon.
Good afternoon. Well, there was some expectation that we could have seen perhaps a little bit of profit taking towards the last couple of hours of the trade. That really hasn't panned out. In fact, we're just going from strength to strength, and we've conquered another 100 points on the Nifty. And for now, of course, along with that, we're seeing a further 2.5% increase in open interest. Remember, this comes on the back of 18.5% added in open interest already from the previous session. So even as we see the benchmark move higher and higher, we're seeing more positions being built up. No let up for now. And as far as the Bank Nifty futures go, it's not very different either. Another 8% added here as well towards fresh longs, even as the index moves higher and conquers 48,000 at the moment. As things stand, we're looking at a significant exuberance as far as the markets are concerned. Let's talk about your Nifty options levels then. And at the moment, do remember that just 2 sessions ago, we had a lot of activity around 21,000, just completely dissipated, and all of that has now shifted higher around the mark of 21,300. And it is the put that stands out in terms of open interest. Not too much to speak for as far as calls are concerned. At the moment, it does seem like a lot of traders as well as investors want to perhaps bet on the markets moving higher. Let's talk about the change in open interest as well, and there the pictures are even clearer. Puts being written, not too much action as far as calls are concerned. Let's talk about stocks then and see where we are in fact seeing a lot more traction. So longs building up and continue to build up in Nalco, Oracle Financial and HCL Technologies. Of course, the IT pack remains in focus today. HDFC Life and ICICI Pru under a little bit of pressure, so shorts building up there. And in terms of stocks which are in fact seeing unwinding, let's pull up that list as well. So short covering seen in L&T Finance along with Hind Copper, and longs and winding in Chambal Fertilizers, Ramco Cement along with SAIL. But I do want to put the spotlight on Maruti Suzuki and what's really happened for just about a few minutes. So if we can have the intraday chart here, as you can see around 2 o'clock, we saw a sharp dip and Maruti Suzuki in fact fell below the mark of 10,000 rupees per share. In fact, its intraday low currently is at around 9,830 rupees. The question is this a case of a market stop loss which went wrong? Was this an algo trade where we in fact saw a further chasing of that particular stop loss? Something that we're going to have to answer perhaps a little bit later on. But for now, while the stock still trades with a little bit of a negative bias, we're seeing an increase of around 5.5% in open interest towards potential shorts. But we have seen that recovery as well very quickly and very swiftly. So a lot of questions remain. Perhaps some of these answers will come through the bow copy later on today.
This is a market on steroids, Tamanna.
I don't know what is happening.
Stunning moves there, but
yeah.
Agam, thanks for that. Agam, firstly, thanks for that. But just quite stunning, really, what's happening in the markets currently.
Just look at the, if you've just joined in to figure out what's happening, which I'm sure you've not, because this is something you watch with bated breath and perhaps your mouth gaping wide open. 21,434. The kind of bump up that has come in the last 20 minutes is, making me really want to see the fund flow numbers at the end of the day. Is this a surge of FII buying coming in, considering that banks have participated so robustly? The Nifty IT is up 4% plus up. So we also want to welcome Omkar Tangsale to the conversation right now. He's a senior research analyst IT at Axis Securities. Omkar, welcome. But before I come to you, I just want to get a word from all of our guests on the panel and on the show today, starting with Deepan as well, on just the record highs that we've hit. And unabatedly, Deepan, there seems to be no signs of strain, fatigue at all in this market. What do you put it down to?
Tamanna, there's no need to be surprised. This is how bull markets work. We have seen many such bull markets in my life, almost 7 or 8 such bull markets. And steadily making 1.5%, 2% moves a day is not something which can surprise us, especially given the kind of money which is flowing in the market. Not only do you have retail investors coming to the market, but FII flows also have turned positive. So I think that there's a fair degree of chance, in fact, that the market could go into like a parabolic zone, where it just shoots up by 5-10% in a few trading sessions. That probability also exists. But as I said, I think, when the whole market is getting a bit greedy, we need to be a bit cautious at this point of time. and just kind of wait and watch. At least I would not like to put any fresh capital to work over here in this market. And these are good levels to start trimming your position, only knowing fully well that next two trading sessions, whatever you sell may still go up. But well, that's how it works out usually. But if you have some cash strategically in your portfolio, when there is a correction, and mind you, there always is a correction, 10, 15, 20% or so in the market, 20% or so in individual stocks, those are good entry levels. But if you don't have any, kind of funds left with you at that point of time, then certainly you can't take advantage of any correction. So I would just advise a bit caution at these levels.
Just a point, Tamanna, that I think individual portfolios might not be gaining as much as the index would be gaining right now, because so mid caps and small cap heavy portfolios of retail wouldn't be galloping at the same pace that the indices are galloping right now. So that is actually a really cool thing. Just before we get in Omkar and talk about IT, since Tamanna wanted to talk about what happens next, Amar, so while an investor mind would not allow, a trading mind, would you take home long positions on the indices?
Index, definitely. Overall, if you see, the index has been on an upside, but basically waiting for some levels to enter is very important, because markets have been opening with an up gap, and then again we've seen some corrections. So entering at the current level, one should never chase any stock or the market. That's very important. You have to wait for some correction or some level which you have in mind. Then you stand a better chance of risk-reward ratio working in your favor. So because the derivatives data clearly points to very strong bullish momentum, and also what's happening is that the shorts are really getting slaughtered, and there's a big squeeze there. So that's also building up the momentum what we are seeing currently. So I would say one should be slightly cautious, but I would say looking at the India VIX, which is around 13 levels, so that also tells me that markets are not unduly worried in spite of this sharp up move that we've witnessed over the last 1,000 points gain in Nifty over the last 10, 12 trading sessions.
Absolutely, the shorts are getting slaughtered. Definitely the mood of the day. Meanwhile, there is only a party and a feast actually for the IT companies and the IT pack. Omkar, your take on the market frenzy right now. Is it greed, or is this just what a huge bull market looks like? And on the IT pack specifically, was this a long time coming? Or is this just, inki bari hai? They were not running up. Has anything fundamentally changed after the Fed meet?
No, the feast, I would say the feast has just been started, actually, but it's not going to reflect down, onto the earnings or any fundamental change as sooner as that. It will take definitely a couple of quarters to reflect on these kind of valuations that people are expecting on the stock, as the spend has just been started. It's been just an indicator from the Jerome Powell that it's going to be rate cuts, and the North America, which was a laggard, and that too into the BFSI part, which was the laggard from past few quarters, is like to be, there will not be any spend cuts, but these spend cuts will likely to happen and going to reflect on a billing will take at least to a couple of quarters for, I'll say more, I'll put it in that way, that Q4 might see some recovery, and Q1 FY25 will have a strong momentum back on track, as we can see the demand goes higher.
A lot of the commentary which came during our Q2 conversations was about a slice or a paring down of discretionary spends for clients of IT companies, large and medium. You're saying it will take some time for that trend to change and to turn. And having said that, are you veering towards the top IT names, or you're looking more keenly at the next rung of companies?
No, the year-end space was already stood resilient because as compared to the large cap companies, those have engaged into the large deal size. So I believe more of, there was a, one should keep in mind that the deal wins were resilient during the lagging quarters, and they stood strong. The only concern was there that the spending delays were happening in past few quarters because of the uncertainties. As the things are getting clear, now people start infusing money many of our businesses are now getting system dependent, or the technology driving the many of our businesses. Previously they used to happen on most of a cost optimization side, but now they are driving sales with the generative and newer technologies. So spends will likely to come, but I would say this will not happen in a one day. It will take around couple of quarters, at least. For this is a quarter of a seasonally weak quarter, or I would say because of the more of a furloughs, and the billing will happen in a less. But the going ahead in Q4 FY24, you will likely to see an maybe infusion of some spendings and ramp up of the new deals that these companies have won in the previous quarters.
What are you liking, Omkar? What are your top picks right now in this space?
Currently, I am bullish on year-end spends as well, because year-end is doing very good, not in terms of the billings art, but also in terms of the technological drive in the product and process development, whether it is auto, whether it is aerospace and high-tech and manufacturing side. But definitely one should be looking at, on the large cap side, our picks is most of the HCL Tech and Infi, and if and LTI Mindtree as well. I'll consider it on a large cap side right now, but definitely on the mid cap side, we like KPIT, Persistent and Coforge.
KPIT, Persistent and Coforge is what Omkar likes best. Thank you so much, Omkar, for speaking with us today on what is definitely going to be a momentous day once again for the Nifty IT. This entire week, actually, and the last 2 days is where Nifty IT really has come into its own. Deepan, I know you have to go. You have a flight to catch, but before I let you go, your advice, your picks, if any, for next week. How are you looking at this market next week, or are you going on holiday till some sense prevails?
I'm not giving a stock for the next week. You can buy the Nifty. I think certainly next week also will be as good as this week. But I'll tell you one thing, that there is value in large cap IT, as we discussed. And I think it's a good time to give, from a trading perspective, some of the laggards in the index stocks like Reliance, HDFC Bank, ICICI Bank, Infosys, TCS. Also, you can add to that list. I think that these are the stocks which have underperformed, which have been laggards, and with the way money is flowing in, these companies certainly will start to catch up or even start to outperform. So from that point of view, I think that if you have to put money to work, then those are the kind of stocks that I think will give you some outperformance, and there's comfort in large cap at this point of time.
Thanks, Dipan, for that. Much appreciate your time, and have a safe flight and a great weekend. That's Dipan Mehta, founder director of Elixir Equities. But I must tell you, look at the Nifty. Look at the intraday of the Nifty. That wants to make a dash towards 21,500, I tell you. It won't probably happen in the next 15 minutes, but it's looking very, very strong right now. And as Amar said, that if you are long, you would probably want to take your longs home. Looking at the index per se, I'm just trying to understand, Amar, between the three indices, which is the benchmark Nifty itself, or the Nifty Bank, or the Nifty IT, which one is looking stronger of the lot?
Yeah, I would say if I look at Nifty IT, what we are seeing here is that it has really reached major zone of resistance. So that tells me that there could be further upside, and also one of the long-term indicators has turned positive. So that tells me that there could be more upside, because if you look at these Nifty and Bank Nifty, they are trading at record highs. But Nifty IT is still a far cry from its all-time highs, because if we go back in time, so it was in March last year, 2022, it had made a high of 39,446. Currently, it's roughly around 35,800. So still there's a long way to go. So for this bullish momentum to continue, I would say getting into Nifty IT would be a better option at the current levels.
Okay, fair call. So Nifty IT to be watched out for. You know what? I was looking at the top gainers. JM Financial and brokerages, investment bank stocks have actually done well today. JM is up 13%. There is not as much gain that we're seeing in Angel, but Angel 2 is up about 2.5%. We've seen a clutch of others do well too. So that bucket of stocks which are the capital marketplace have done really well for themselves. So do watch out for those. And today is a day for chemical stroke spec chem names. So even if you don't include Jubilant Pharma, Nova and that stock is up 11.5%. But there is strength in Balaji Amines, there is strength in alkyl amines, there is strength, I think, in Deepak Nitrite. So that's another set of stocks in addition to IT and banking, which have done really well for themselves. Again, a laggard sector which is coming back, Amar. Could it potentially have the kind of move that IT is suddenly shown?
So you're talking about the chemicals
Yes,
space.
I am. Yes, I am.
So what we are seeing in chemicals is that chemicals, there was some, I would say, loss of interest among investors, and the stocks in these sectors, they were trading comparatively lower. But recently we've seen some of the stocks really moving up. So this is one sector one can definitely keep a watch on. But I would say that it would be stock specific rather than overall sector really rallying the way we are seeing in IT or in banking or in auto or those sectors.
To keep the Nifty on the screen somehow at all the time now for the next 14 minutes or next 13 minutes, because the Nifty is a stone's throw away from 21,500. Mind you, it's not as big a landmark as 20,000 was when we hit 20,000 for the first time. But just the way in which these levels are getting taken out is quite stunning. 21485 currently for the Nifty. It is a really, really strong show, triple century. And yes, 300 points is not as big a deal as it used to be before. It's only 1.5% or less than that. But this is remarkable because of the way the move has happened just in the late hour of trade. If the Nifty looked strong yesterday, it is looking extremely strong today because the two of the key components, which is banks and IT, are doing so well and so strong at the current point of time. It's just quite stunning the way the large caps are moving in trade today, and being given company by the small caps as well, of course, because the small cap index too has done really well for itself.
You know, so your 300 points may be in isolation, but just look at this week. Just look at this week and where it started from, and we'll pull up those weekly numbers as we head towards close. But also the fact that public sector banks, and you know, Niraj just talking about banks participating aggressively. Public sector banks are just phenomenally showing strength. Union Bank up 4.5%, SBI, Punjab Sindh Bank, all of them up between 3 and 4% after running up a fair bit already. And you're seeing those sharp up moves coming in the last half hour or so, which is telling you about the interest, you know, the interest in building up positions ahead of the next week, I suppose. You know, Mr. Singh, I just want to come to you on this because we've already seen a fair bit of run up in banks, and then you are seeing a huge breakout move in the bank Nifty as well. Anything that you are particularly eyeing right now or keen on?
Yeah, I would say among the banking space, Axis is one stock which is now consolidating because Axis Bank witnessed a sharp up move and currently it's consolidating at around 1120 odd levels. So any pullback in the stock towards 1100 levels, that can be a buying opportunity for an upside target of 1150 in the short term with a stop loss below 1080 levels.
What is your top closing strategy, Amar?
I would say one can look at, I've spoken earlier also, Tata Steel is one stock I'm definitely liking because the stock is very strong on the long-term charts, and we've seen the stock consolidating. So generally what happens is that if the stock is in a very strong uptrend from a long-term or medium-term perspective, and there is a consolidation and we see a breakout, and that also on significant heavy volumes, so that tells me that there could be more upside to the stock. So this is one stock one can definitely look at from the metal space, because Tata Steel, if you go back in time, so there's still upside to it. So it can touch almost 150 levels. So this is one stock one can look at. Below, with a stop loss below 127 levels.
And sorry, just wondering, this 150 odd level you expect early, I mean, in a better part of next week, or is this a slightly lengthy time frame call?
The way the markets are, I would say the momentum continues the way because see what's happening is that globally also, if you look at the global markets, the Nasdaq is up almost 41% year till date. So that clearly tells us that where all the action is actually happening and how it is percolating all over the world. So we are still, I would say, a long way to go. But yes, at these levels, one needs to be cautious. But one needs to keep a watch on India VIX, because that's that give the first signal where to really watch out. So if it starts trading above 14, 16 levels, then you need to be slightly cautious. If it goes above 20, then that means a lot of selling would happen.
So India VIX at 1320 right now. And maybe some way to go. Now, after this, we started the show, Amar, with your levels, 21,470. I'm not sure if the last dash to 21,500 will happen or not, possibly not, and maybe a bit of flagging there, but any fresh kind of resistance levels that you're now charting on the Nifty, which is surpassing every 100 points very, very easily?
Yeah, I would say it's like, I would say that it would really take courage for the shorts to get into at current levels, because the way the momentum has been on the bullish side, that is really, I would say, it's you can say a cyclone sort of move that is we are witnessing there, and it's across the board, happening across sectors. But at these levels, one needs to be, I would say, slightly cautious, and we'll have to wait and watch how the market opens on Monday, and then maybe take a call as to. But the long-term trend definitely remains bullish, and so it effectively means that pullbacks should be used as buying opportunities rather one should getting into shorting opportunities.
So, any particular trade that you would like to recommend before Monday?
I would say in the IT space, we've been bullish on the major IT stocks. So Infosys definitely is one stock one can look at from a short-term perspective. It's breached crucial zone of resistance. So earlier it was having resistance around the 1550 mark. That's taken out. It's trading around 1585, 87. So this is one stock one can definitely look at, because on the upside it has a potential to rally towards 1620, 1630 in a short span of time.
Well, the going is good. The going is solid. Can we bring the Nifty back up on the screen? Okay. 7 minutes left. We may not make that dash to 21,500. Maybe we'll save that for Monday. And that might not be a bad place to start the trading day as well on Monday. But for now, I think everybody's happy. I must say that the market breadth isn't as strong. So we've from what it was at the start of the trading day. So as much as we would like to celebrate what's happening currently, just pull up the advanced decline ratio and you see that there is a bit of a narrowing down of the market breadth for sure. So there is, you could argue, not as strong a mood as it is evident in the Nifty and the Bank Nifty and Nifty IT. And a clutch of stocks have fallen. I mean, real estate has done very well, but Prestige Estates is down 5%. There is weakness, for example, in JSW Energy today at about 4% higher. 360° 1, we're talking about capital marketplace doing well, but 360° 1 or IIFL, etc., have all come off. NIACL, LIC, PFC, the buzzing stock of this week is down about 2.5% too. So there is an equal set of stocks which are coming off at the broader end of the spectrum, but the index is looking very, very solid. Just wondering, Amar, anything that looks tired, or would you not want to risk an STBT because of the mood of the market?
Yeah, I would say that, what's happening in the markets is that some profit booking is also setting in, because the way the markets have rallied over the last couple of weeks, I would say precisely 2 weeks, that has really caught most off guard. So it's also but natural that investors who are long in stocks across different multi-caps, they would be looking at profits or booking profits, because it would be rational also and logical also to look at booking profits, because the returns have been spectacular across the board, across sectors. So I would say that one should be at current levels slightly cautious, and I would say rather wait for the Monday morning to open.
Right. If I look at what's perhaps not firing as well in a market like this, it's the FMCG pack. Radico Khaitan, Nestle, Dabur, Godrej Consumer, Imami, all of them seeing a fair bit of a downtrend in a market like this. So it's a very specific kind of a theme that we're seeing building up
as we just head into last few minutes of closed. Amar, thank you so much for joining us today on the show and staying with us on what is definitely going to be a very, very exciting market close, as well as an exciting close for the entire week. You've hit record highs on the Nifty and on the Bank Nifty. The Nifty IT is over for nearly 5% up, really, as we're speaking. All across the pack, you are seeing that excitement coming in. PSU banks have worked very well. So have public sector enterprises, and that has been a consistent theme. BEL, Coal India, all of them are doing pretty well. But NTPC is one I'll talk about. ONGC, after a bit of a drubbing, the earlier part of the week recovered smartly, about 2.5%. Cochin Shipyard. So these themes, which have been a favorite in the market, have been consistently there. But that last dash you were talking about, Niraj, the Nifty just about 40 or 30 points away from 21,500.
Yeah, well, the post-closing, of course, will mean about a level slightly lower than that. But yeah, Tamanna is right. We're ending like that, just so tantalizingly close to 21,500. But maybe Tamanna and Savina open on Monday morning with the Nifty at 21,500. That would be quite something to start the week with. But no complaints, really. Even if just coming off from the highs of the day, I don't think anybody is complaining. But the banks, really, that's the stellar showing, really, 0.88%. And just the way the Bank Nifty moved in the last 1 hour of trade, I don't think too many people anticipated. And then the kind of upsurge that came in, it's, Nifty IT was strong through the day. But yes, the Nifty IT being 5% up means that it has been a much stronger performer than the Bank Nifty for sure. But just the way, and even that has moved up, but just the way the banks caught up was quite astounding. Bringing up the heat map, mid caps and small caps, and mid caps in particular have been a bit weak, but the heat map should come up on your screen, and it looks almost similar to what it did when we started the show about an hour ago. So the defensives, the life insurance companies, Nestle, etc., looking weak, but on the gaining side, HCL Tech has even surpassed, and Infosys up 5%. So all three biggies, the top three names, are actually up over 5% apiece. This is, you don't see this too often. I don't think we've seen this in all of 2023. These three biggies ending with gains of over 5%. Very strong moves there. State Bank of India and NTPC giving company. Tata Steel has done okay. Tech Mahindra 3.5%. But just quite stunning to see what's happening at IT by and large. I mean, that takes the cake. And which is why, while banks, courtesy State Bank of India, BOB and some others are doing well, the breathtaking move is in IT. Must not forget Adani Enterprises, Asian Paints. Those are the other two non-Nifty, non-banking names which have done well. And then, of course, metals have done okay. Tata Steel, JSW Steel and the others have also done well. But yeah, it is IT all across the large cap space. And Tamanna, I doubt that the mid cap space has IT losers. If anything, some of the stocks must be really, really strongly ending the day.
Absolutely. You have seen, if I were to broadly, Niraj, talk about the themes today, IT definitely, and two things fueling the IT sort of excitement, frenzy, whatever you may want to call it. Fed indicating rate cuts, US economy on the mend, and the rupee also doing fantastic. And we'll talk a bit about that in a few minutes from now and get you an update there. But on the mid-cap side as well, I just want to go through some of our big news flow wins today. So BEL, you have your entire rail pack, which came in today with order flows. Those are the kind of news stories that are fueling interest in these companies. Texmaco, Jupiter among them, which have seen a very, very good run up through the day. Let's pull up mid-cap gainers as well and see what has been doing well there. Public sector enterprises are continuing that, sort of interest and boost from investors and that faith from investors. You've been seeing that go through. Persistent Systems, Oracle, Coforge, so mid-cap IT there again. Bandhan Bank, Union Bank, some of the winners coming in. Adani Power, IRFC, and HPCL, some of the key winners. What's not done too well? A bit of profit booking has been seen in the real estate segment, I would say, and in FMCG. Prestige down about 4.5% today. JSW Energy delivery has been consistently underperforming a market of this sense, and PFC REC has also seen profit booking. I would say this is also a day of profit booking in select counters, and I just want to see where Areda has closed, because after hitting circuits on the upper level, it closed 10% down as well. So you've had a mix of both. Select counters have seen some profit booking coming in, but it seems like a fresh leg has begun for stocks and for companies, especially for IT and banking. You're looking at a fabulous close though, and if you can pull up weekly charts to just get a sense of how this week performed. It's been a huge week for us at NDTV Profit as well. If I can just add, our first full week of coming back and our programming on the markets, and we couldn't have asked for a better start, Niraj, I must say. It's like a nice warm welcome from the markets, if I may go that far to say, if I look at how it's been all week.
Most certainly, and the cherry and the icing on the cake is the currency and the way it's behaved, Tamanna. And therefore, as we wrap up this week, it's great to get a view from somebody who looks at the rupee very closely as well. And Anindya Banerjee from Kotak Securities, I'm told, is on the line, so go across to Anindya. Anindya, thanks so much for joining in. Any thoughts on this very sharp move? While some bit of strength was anticipated, did this take you by surprise?
Thank you so much for having me. Actually, the Indian rupee has been a laggard for almost like 3 months. So if you look at the US dollar index, it's trading at a 4-month low. A lot of the emerging market currencies are doing fantastically well against the dollar. And this whole now talk about Fed acknowledging that the interest rates have peaked and the next leg down, the next move is down. So 75 to 100 basis point cut starting mid of next year. So that has what has finally, I think, broken the back of USD. And we are seeing today a lot of exporters selling, and as well as a lot of speculators finally entering the market. And that's why we have finally seen a big move down on the USD.
Anindya, hi, Tamanna here. Great to speak to you here on NDTV Profit. Just give me a sense of whether we have seen an easing of RBI's dollar buying interventions. Is that also fueling the currency move? And has the 3 rate cut indication by the FOMC now been priced in, or are you seeing a lot more coming through?
Right. So the RBI intervention will be there, but the RBI won't like to stand in front of the USD at the current levels where it's around 83-ish. Because based on where the other currencies are, it should at least be around 82.5. So let's say if it gets to 82.5 or slightly below, then we could see the RBI buying dollars of intervention increase significantly. Now, coming to the interest rate cut, so if I look at the private estimates, it's basically they are pricing in 150 basis point cut, so just double of Fed of in next year. So no, it's not yet priced in as far as the Indian rupee is concerned. Because as I said, Indian rupee has been a big laggard in spite of all the things being in its favor. The dollar index, the oil prices, the SPI flows, the equity markets, everything. So in spite of all these things, Indian rupee has held out primarily because of the RBI buying dollars. And I think the RBI will not like to artificially keep the rupee weak. So some conversions to the international prices will happen, and we should see a more strong Indian rupee against the dollar.
How strong, Anindya? Do you have a figure in mind?
So 82.5 looks like a possibility.
Okay, so you're seeing this continue till about 82.5. All right, thank you for that. Anindya Banerjee there from Kotak Securities saying that the party has just begun as far as the rupee is concerned as well. So a lot more strength to be seen there perhaps. Meanwhile, benchmark indices have risen for a 7th week in a row. Just a quick recap as we close the show. The Nifty has recorded its highest ever closing at 21,449, so just about 51 points away from that 21,500 mark. The Sensex has closed above 71,500. Mid-cap, small-cap indices have all risen for a 7th week in a row. Definitely been a fantastic week for the markets. A fantastic week for us here at NDTV Profit.
Most certainly. I mean, the first week couldn't have asked for anything better, and hopefully you guys like the coverage that we are doing. We are open to feedback. Please write into all of our social media handles if you want to, if you can, and we'd love to try and understand, as some of you have been doing. So we'll do that. But from Tamanna and me and the team that put this show together, kudos to the markets. Thank you for the viewers for tuning in. And of course, we'll see you with live market action on Monday morning.
All right, we'll wait to see you then.
Thanks for tuning into Talking Point on NDTV Profit. I'm your host, Niraj Shah. Our guest today is, I can use the term indomitable, S. Naren. Naren, thank you so much for being a part of the show.
My pleasure.
Naren, tell us, for everybody who's invested in equities, I think the last few days have been a bit of a dream up move. Valuations may have been stretched. Global markets may not necessarily have been the most supportive, but we've had a good move thus far. How do you approach equities currently?
See, it's a very, we manage other people's money, and we've been managing other people's money for a long period of time. So as far as the old money is concerned, people, I should thank all the people who have invested with us in the earlier days, because they got very good returns. even for the people who have to consider, we are in a boom market. For a long period of time, we have had a boom only in mid-cap and small-cap in recent periods of time. If you look at the 2-year returns in large-cap, bulk of the returns have come maybe in the last 1 month or so. So we have a situation where the boom in large-cap has just started. And that is the challenge, how long this boom lasts in large-cap, because the valuations are not cheap. But for 2 years, large-cap has kind of underperformed mid-cap and small-cap, and that is the challenge. We've looked at earlier years in ICICI on election years like 2009, 2014, and the challenge for us is, I think the quantum of rally is going to depend on the quantum of FII money which comes. And it is very difficult for a person like us to predict how much money will come, because they have not been investing after 2021. For 2 years, they have virtually not invested except for small periods of time. So it's a tough task at this point of time. But the real move, I think, is going to be in large caps, and how much the move will be, we'll never be able to predict.
Coming from you, that's an interesting answer, Naren. Is that because, one would presume that at some, valuations plus earnings would form a part of that. So and because you are getting the monies every month, what do you do, even if you can't predict? What are you doing currently then?
See, our model is very simple, that, when we get the money, we have to invest. And it is not that there aren't any fundraising happening. So if you look at this year, for example, on a continuing basis, we have had QIPs, we have had IPOs, we have secondary sale by a lot of private equity. That has ensured that a lot of the money that has been raised has gone into that actually. So it is not as if, the money has come and you just bought all the stocks in the secondary market. Bulk of it has actually gone into primary. If you look at these 3 groups, that is IPOs, QIPs and secondary sale by people like private equity. So that's what has happened actually. So it is not as if the money has just gone into the markets fully. That's not happened actually.
That's true. But so therefore, so when you get money which is scheme agnostic, let's say it's in a flexi cap scheme coming in, then you are comfortable probably putting more allocation to the large cap pocket, because I heard you use the term boom when it comes to large caps and not as much in mid caps and small caps. Would that be a fair assessment?
Behaviorally, I keep telling my colleagues in my team, invest more in large caps. But imagine the kind of boom we have seen in small cap and mid cap. It's been very tough to say I won't invest in mid cap and small cap, because every mid cap and small cap goes up like one rocket.
That's true.
Whereas if you look at most of the mega caps over the last 2 years, what returns have they given? They've given hardly any return. So it is not as if any AMC would have said, I'll not invest in mid cap and small cap. I'm sure even in the flexi cap funds, there would be a fair amount of mid cap and small cap at this point of time. Because the reality is that if you had avoided all the mid cap and small cap, it would have been very difficult to do returns.
But here on?
Here on, I really think 2024 is going to be a year of large caps.
Large caps, okay.
Because you have had 2 years of, very little money coming from FII, and I think 2024, the returns have to come if FIIs come. If FIIs say, I'm not going to invest, I don't think you're going to have big returns, because I think domestic investors have invested significant amount of money.
Most certainly. Thanks to mutual funds, PMSs, AIFs, etc., the amount of Indian equity in the hands of the Indian investors has been fairly large, which is a good sign. Okay, let me try and we'll come to the risks as well, Naren, because I'm sure in your mind, whenever I've spoken to you in times of euphoria, you're the first to highlight the risks as well, and we'll come to that. But I first want to dissect how you're thinking as a portfolio manager about what within this bucket as well. So banks have started to move, yes, but clearly far away from the kind of gains that Nifty per se has made as a benchmark, or some of the other sectors have made as well. Is there a case for banks to give good returns over the next 12 to 24 months? Why or why not?
I think banks will give reasonable returns, but banks as a sector is not an underinvested sector among all the funds. So if we are all going to get money and FIs are going to get money, what is the sector they'll invest in? Banks certainly. So I think banks are certainly going to do well as money flows. At the same time, if money flows out, they are the sector which people sell. So you have to keep that in mind. But from a cycle perspective, I think it's the sector where there's been fair amount of negative impact of net interest margins peaking out. There have been a lot of concerns. I don't think there is any big risk of near-term non-performing loans going up. The corporate sector has been in fine fettle. I think the banks with a very good deposit franchise are going to do well over the next 2 years. But finally, it's dependent on flows. Banking is dependent on flows. Okay. If FIs get outflow, they'll sell banks. If domestic get outflows, they're going to sell banks. If, on the other hand, if each of us are going to get inflows, we are all going to buy banks because it's almost 30% of the benchmark or more than that at this point.
Yeah, but domestics have gotten flows thus far, and yet banks, despite having good valuations or valuations in their favor relative to the recent historical averages, haven't quite moved. So do you think now finally the time can come, because along with domestics, if FIs also get in money, that's when the money will happen.
Absolutely, I think that is clearly the situation.
Okay, what about NBFCs? There is enough warning given by the Reserve Bank of India as well around unsecured lending. Again, if a rate cut trajectory is something that we anticipate in 2024, that might have a bearing for both NBFCs and banks as well. So how do you look at NBFCs in that regard?
See, in NBFCs, you have to be much more careful. I think the real area where we have to be careful is fintechs, but fintechs are not listed. So luckily for us, we don't need to look at them. In the case of NBFCs, there are some fantastic NBFCs who manage risk as well as a bank. So in those cases, we have to do actually a valuation analysis rather than a risk analysis at this point of time. And it's not that they have mismanaged their risk in a way that we have to worry about. But NBFCs are also, there are good NBFCs, average NBFCs, below average NBFCs. There are very good NBFCs. You can't look at them and say, you can say all of them are one way and say either positive or negative at this point of time. And the reality at this point of time is, I think the deposit market is equally important. The people who are able to raise resources cheaper, I think they have a good situation, whether it is in the NBFC market or in the banks market.
Got it. Then what about non-lending financials? There the performance has been fairly divergent within the capital marketplace as well, wherein AMC stocks haven't quite given the returns that some of the others in the capital marketplace, be it the brokers, be it some wealth managers, be it the platform companies have. And then the non-capital marketplace, insurance, you would argue that you can almost say that they have been stagnant, if you will. I mean, I was looking at returns of the private insurers since 2017 that they've listed. A 7-year return is 120%. That's nothing to write home about, really. So what about the non-lending space, non-lending financial
I think
space?
you have to go bottom up there. And I mean, some of them have gone through sideways movements for some periods of time. So I think we have to do a lot of bottom up work there and then do the analysis. So I think as such, it can't be one way looking at it. And some of them, the cycles have actually, last year they had a fantastic January to March. So the base effect is a challenge for the next 3 to 6 months. But once people realize it's actually a base effect in play, I think people will realize that the long-term outlook is still good and you can't look at year-on-year trends. How many people look at year-on-year trends is going to be interesting, because last year Jan to March was fantastic for various reasons in insurance. So people shouldn't look year-on-year. If they start looking at year-on-year, the near term will look average in insurance. And that is, those are the kind of things that we have to look at. See, as such, if you look at the market, there is no pocket which is very, very cheap.
Agreed.
I mean, we have had such a big bull market that if we come and say, okay, I'm going to look at this area of the market, this is very, very cheap and invest aggressively, that scope just doesn't exist at this point of time. You have to look for only relative cheapness or hope for a trade which moves from being fairly valued to overvalued. That is a trade that we have to look for. Can it happen? Yes, because India is one of the few structural stories in the world at this point of time. And for a person like me to say, okay, I look for a trade from fair value to overvaluation is something which is very tough for me. But it is something which could well happen in the year 2024 at this point of time.
And what would be the catalyst for such a thing? Earnings growth or the fanfare around investments that might be happening? What could lead to that?
The catalyst is actually that Fed cuts rates. Then people say we have to invest in emerging markets. Then anyway, domestic flows have never slowed down. So you have domestic flows, on top of it FII flows. Actually, in the last 2 years, you have had a situation where you had domestic flows but not enough FII flows. So you have, if you have a situation where you have both domestic flows and FII flows together, that makes for a very, very uncomfortable market for people who look at valuations like we do at ICICI.
Got it. Just before we take that break, and then we'll of course talk about some of the pockets that Naren particularly may be liking. But just wondering, Naren, there are people who are saying that there is a very high probability because of all the factors that you mentioned and the fact that we are looking reasonable on growth on the country front as well, that India may eventually be the emerging market which may reach stratospheric levels on valuations, even bubble territory, because there are not too many games in town. Would you, when you scan the global landscape, do you get such a feeling too?
It is possible. See, markets in the near term are completely unpredictable. And when we look and compare all the big emerging markets in the world, how many markets are there where you have a macro where fiscal is under control, current account isn't under control, inflation is under control, corporate sector is in good shape, and the only problem is high valuation? I'm not able to see an emerging market with all these situations. So can it be? But does it change? See, valuations can go up in the near term, but in the very long term, valuations do play a role. And that is a challenge, particularly when we are managing other people's money. True. So in the near term, valuations can go as high as anything you want. And this is the learning from years of managing other people's money.
But is there a case that this can happen in 2024?
There is a case that it can happen in 2024, and it's a worrying case when you're managing other people.
Okay, great. Now, Naren, I've asked you about one of the key pillars, which is the largest weighted, which is financials, and we've discussed that at length. I would love to understand, where is it that you believe that earnings growth looks set as remaining strong, or the probability of earnings growth is strong for the next 2-3 years, because there are a lot of pockets in which either there is government capex happening. I know export demand is not quite there, but maybe possibilities later. So what is it that S. Naren likes?
See, I think we clearly like mega caps. See, over the last 3 years, what has happened is slowly, if you look bulk of our funds, you will find that mega caps have done so badly compared to small cap and mid cap. So people have asked this question, go across sector, you will find that the smaller banks have done very well against the larger banks. Look at the smaller IT companies have done very well against the larger IT companies. Look at the smaller consumer companies have done very well against the larger consumer companies. So across sectors, what you see at this point of time is that the mega caps have done badly compared to the smaller companies. And if you look at, by and large, the portfolios also, you will find that people are underweight the mega caps compared to the benchmark, and they've benefited out of it. So I think this is the year where you go and say, let's buy the mega caps, because the mega caps have had now 3 years of big underperformance.
Yeah, sure.
And people have asked us 3 years back the question, why don't you have these mega caps? And at that point of time, it was a tough time to tell people they are not looking cheap. The mega caps or the quality stocks at that point of time, they were not looking cheap compared to the small caps or the PSUs or the telecom companies or the metal companies and various other things. 3 years later, those companies have gone sky high, and these companies have barely participated. So this is what we think at this point of time. And this is to execute this, and then you never know how long these trends changed, how long you go back, and that is where it is. That is where there is relative value. As I said, there is no pocket of where markets you can say is absolutely cheap. So you look for relative value at this point of time.
But within what themes? I mean, mega caps, there are a few of them, but they are present across multiple sectors, but with maybe one or two sectors being the key drivers. So what within this mega cap universe thematically do you like more?
Everywhere you go across, as I said, you go across banks, you go across consumer companies, you go across IT companies, you go across conglomerates. Everywhere that is the situation at this point of time. And if you look at it, no, one of the things that we believe at ICICI is bad news and bad share price go together. Good news and good share price go together. 3 years back, people said, how can PSUs deliver? And it looked like PSUs can't deliver. Today, does anyone ask these questions? No one asks these questions. So somewhere, no, and today you can find a reason and say this mega cap has this problem. That mega cap has that problem. I'm sure you'll find an answer why this mega cap is not delivering. But the reality is that, good news and good share price go together. So we look for bad news and bad share price to go together. And then sometimes some of these things revert back to mean. And the challenge is patience. And that's how we think about it at this point of time.
Yeah, so I can completely buy your point about how banking mega caps, for example, haven't quite had the move. There is a case maybe for valuation multiples to re-rate, as the case may be. What about information technology there? There are a few out there which haven't made a move, but the arguments that come in on almost all notes that I read is that discretionary spend, if anything, will not come back in a hurry. So is technology on the back burner, or do you think even tech, there is a case being built there?
I think no, basically you maybe in these sectors you'll have to buy more gradually, because the near-term outlook looks so bad. But it is not that, information is democratized now. Does Niraj know it? Yes. Does the viewers of NDTV Profit know it? Yes. Does so many people know it? Yes. So what happens is, over a period of time, everyone knows that the outlook for discretionary IT expenditure in 2024 is bad. It gets priced in. And once it gets priced in, sometimes what happens is the opportunity still exists because almost everyone knows it. And everyone goes underweight the sector. And that happens. And that is part of investing today, because compared to the 90s, what is different between 90s is today is that information is fairly democratized. Even if you have a good internet connection and a good laptop or an iPad, you will know that there is a problem in discretionary IT expenditure.
Hello and welcome to NDTV Profit. You're watching IPO Adda, and the company in focus today is Suraj Estate Developers. It's a central Mumbai-based real estate company which is into development of residential and commercial properties and also in tenant resettlement in that area. And joining me is Mr. Rajan Thomas, who's the chairman and managing director of the company, and Rahul Thomas, who's the director of the company. The company's IPO is opening on December 18th, closes on December 28th, price between 340 to 360 rupees a share. It's a fresh issue of 400 crores, and the company is valued at nearly 1600 crores at the upper end of the price band. Gentlemen, thank you very much for joining us on NDTV Profit. My question to you, Mr. Rajan Thomas, you're raising 400 crores in fresh issue. What is the purpose of this fundraise?
It's partly for retiring high-cost debt and partly for launching our existing sites to meet the cost of launching the existing sites. We have about 16 new sites which we have acquired sitting on our books, and we will be using these funds partly for launching those sites as well.
Rahul, can you give me a sense of what is the kind of debt you are sitting on as of today, and how much of that debt would be retired or repaid?
So currently we have 450 crores in terms of our secured debt. And out of that, we plan to repay 285 crores of our secured debt from the IPO proceeds.
Mr. Rajan Thomas, if you can give me a sense of the kind of opportunity that is there in Central Mumbai area, because you are working in Central Mumbai, which includes Parel, Mahim, Prabhadevi, and a little bit of Bandra. So can you give us an idea of the kind of opportunity that you are there, because you're a localized player in that market?
Yeah. So basically, you see, this is a very prime area of Mumbai city, as you call it, the island city of Mumbai, where vacant lands are very rare to come by, or if at all they come, they are at very high prices. So the only way to go forward is to engage in redevelopment of very prime properties. So what we essentially do is come into terms with existing tenants, provide them very good quality housing as permitted by the government authorities, MADA and BMC. There are schemes. One of the schemes which we are specialized in is 33(7) of the DC regulations, where we are allowed to give ownership rights and give area of up to 425 square feet to each tenant in lieu of the existing area which they occupy. But if that is 300 and below, we'll get 425. If the area is more than 300, they will get accordingly something like 40% more than the existing area. So the kind of scope we have is tremendous, because there are about 19,000 such assessed properties in island city of Mumbai, of which only 4,000 properties have got NOC for development. So there's untapped potential of up to 15,000 properties. Besides, government has also introduced a new, in the last DCR, there were 30 years and above, properties which are older than 30 years and above, buildings, society buildings, can also go for development. So this you have to do it in a different way by buying TDR from the market and loading it on. And it's also related to the road width and things like that. But there's a tremendous opportunity there. It's a new kind of a window opening up for us. And as we speak, we have dealt with 3 such societies. And going forward, we have many societies who want us to do it. But post IPO, we will definitely be going also in that direction.
Okay. Give me a sense of, when you say that you develop real estate properties, my understanding is that you don't have your own firm that develops it. It's a third-party contractor that does it for you. So is primarily is it fair to say that it's an asset-light model that you're following?
When you say, first of all, most developers outsource the construction work to reputed contractors, because you see the value that we can save by getting engaged in construction activity ourselves is very less. So we opt to appoint very good contractors who can execute these projects. Now, coming to asset light, what is asset light? Asset light is we don't put too much of money upfront in acquiring a land parcel or getting into any development scheme or proposal. So our asset light, one of the asset light is development of society properties, because these properties you typically don't buy, you don't have to pay for land, you have to only engage in getting the consents, and getting all the approvals, buying the TDR, loading. So the investment is relatively less compared to the scheme of things.
So give me a sense, Mr. Thomas, typically when you get into a property development or redevelopment, let me put it this way, what is the kind of investment that has to go from you as one of the parties to the joint development?
So I think first let's start with the land cost. So that has to come from your own equity. Secondly,
But in many cases, the society has the land in terms of conveyance, right?
Yes.
Yeah. So if it comes to society development, the kind of money that we have to invest is relatively less. Mostly is related to obtaining the, buying the TDR, getting the plan.